Hi, I hope everybody had a great weekend. Thanks for joining us for our Monday training session. This morning, I am pleased to introduce Jim Walter, who's with Companion Life. And Jim approached me about a year ago and said, Lynn, we've got this really unique product. And at first I was like, listen, you know, we've already got Principal, and we've got Lincoln Financial, and we've got access to a lot of ancillary carriers. But Jim said, I think I've got something unique you won't have seen yet. And so he and I talked about it, and I said, you're right, Jim, I haven't seen anything like this. And so, having said that, over the last several months, Jim put this presentation together for us and for our agents. He's not working with any other general agency in Iowa, right, Jim?
That's correct.
And so we think this is a great opportunity for KHI and for KHI agents to try to have something else that's different and unique in the marketplace. And so specifically around ancillary products and defined contribution. And as you guys know, on the medical side, defined contribution, that concept is not going away. In fact, we see that only getting bigger and bigger. So with that, I won't want to steal any of Jim's thunder. As you know, we are recording this. We should have everything, all the trainings that we've done over the last several weeks finally posted to our website this week. So you'll be able to navigate around. As you have new employees that start, you can point them to our webinars on our website. So anyway, without any further ado, I will turn it over to Jim Walter with Companion Life to talk to us about defined contribution. And there you go, Jim. Thanks.
Okay. Thank you, Lynn. Good morning, everyone. I appreciate this opportunity to visit with you this morning and talk about defined contribution. Before we start, I'd like to talk a little bit about the Companion Life Insurance Company. We are based in Columbia, South Carolina, and are an operating subsidiary of Blue Cross Blue Shield of South Carolina. We specialize in group dental, life, AD&D, dependent life, short-term disability, long-term disability, and vision coverages. Our target market is groups from 2 lives up to 1,000 or more, depending on the prospect. And we offer both employer-paid and voluntary products. We are A+ rated and have been consistently by AM Best. Defined contribution has been available now for a little over a year, as Lynn indicated, and it's a lot different approach to something that has been around forever. I mean, we all are familiar and know that our groups have at least some ancillary products, and by ancillary we're talking about the life, dental, vision, STD, etc. Excuse me. What makes defined contribution a little different is, I'm sorry, apologize there. It takes the rate factors off the table. It increases the opportunity to offer additional coverages, and it allows an employer to define their costs. So this whole product is driven by the employer deciding how much they want to contribute towards ancillary coverage. It's also driven by the benefits the employer wants to offer. The only requirement is, excuse me, the employee must spend the defined contribution. But in the process of spending that $25 they're being given, they can also add their own money and purchase additional benefits. What makes this different to traditional ancillary marketing is all the benefits that you're going to see are guaranteed issue. All the rates are guaranteed for 2 years, and we have effectively eliminated the participation requirements on the voluntary benefits. You do have the option to include basic group life either as part of the defined contribution, or it can be paid outside the defined contribution. The key is the group life will require 100% participation. So either the employer needs to pay for the life, which they often do anyway, or they can include it as part of their $25. They simply have to make sure 100% of the employees participate. So what are the advantages to the employer? Well, the first thing is you're controlling cost here. Instead of negotiating individual sets of rates and managing multiple billing statements, you're determining the amount of money that you want to you want to spend as an employer for ancillary coverage. So you're defining your cost. The minimum employer contribution, again, is $25 a month. So if you are working on a 20 life group, right out of the box, you know you've got a $500 a month group case. And then from there, giving the employees a chance to buy additional coverages will only increase the amount of coverages being sold and your commissions. So the employees have the chance to be consumers here. They can purchase the benefits that they want and need. It takes the employer out of the position of not having to make all the choices. And because you are eliminating the participation requirements, you're going to be able to sneak in those other lines of coverages like voluntary life that often are subject to, minimum percentages or minimum number of lives enrolled, and sometimes that doesn't always work for the average group, and the folks that really want the life don't get it because they couldn't hit participation. So those kind of issues are greatly eliminated or completely eliminated.
And Jim, before you go on, this is Lynn. One of the things, just confirming, so goes down as small as a group of 2.
Actually, this goes down to 10 lives.
10 lives.
Yes.
Okay.
Companion life, thank you, Lynn. Companion life can quote down to 2 lives, but this product is targeted specifically for the 10 to 99 employer.
Thank you.
Okay. So finally, as you see, one of the advantages is there's actually 5 benefit plans to choose from. So here's a brief summary of the benefits available. It's group life, AD&D, and dependent life, voluntary life, and AD&D. The AD&D is an employer election, so we'll either offer voluntary life alone or we'll offer it with AD&D. That's the employer's choice. We also offer voluntary short-term disability, voluntary dental, and voluntary vision. Okay, and then finally, this product is set up to be paid on level commission. So by doing defined contribution, there's a level 15% commission on basic life, voluntary life, and short-term disability, and a level 10% on dental and vision. Many carriers, including us on our traditional employer-paid coverages, use a graded commission scale. So here's another advantage of defined contribution: higher commissions, the elimination of participation concerns. So you know when you're going in, if you get an employer to define the money they're willing to spend, you already know whether it's $25 or $40 that you've got a guaranteed amount of group ancillary income and commission coming your way. And then from there, it's just a matter of who enrolls and spends additional money out of their pocket.
And Jim, one of the other things that we talked about is KHI has set up to be a general agency, and so I just wanted to comment to you guys, those commission numbers are what's payable to the agent. And then we would have our override for KHI built in on top of that. So that would be your commission, and it is the % of the premium generated.
That's correct. Thank you, Lynn. Okay. Moving along here, I'd like to take a look at an employer presentation that we've designed. And these slides that we're going to look at are designed for you as an agent to make this presentation to your prospects or to your current clients. So this can be personalized as needed to your audience. But this really is intended to just sell the concept. So here's our cover page. But as it states over there to the left, the defined contribution approach allows employees to select specific benefits with premium dollars provided to them by their employer. The employee may also select additional benefits to the ease of payroll deductions. Okay, here it specifies that to trigger this program, you need the employer to contribute a minimum of $25 per employee per month. However, there's no limit. We've seen some groups decide to offer as high as $50 to $75. Essentially what they were doing was deciding to eliminate or combine all of their ancillary products under the defined contribution approach. So in a way, it's kind of like handing a gift card to an employee and letting them pick the benefits that they want to have. And the best part is it's the first $25 is employer money. Okay? The employer can choose any combination of the 5 benefits. So while we do want to encourage group life, which is oftentimes the most common benefit other than medical, you do not have to take group life. You simply have to make sure you have 100% participation in the group life plan. After that, the other lines of coverage are strictly voluntary. Okay? The key is, you probably wonder, well, how can you do this with no participation requirements? Well, since the employer is giving everyone $25 for benefits that are normally voluntary, we're seeing these groups enroll. People are buying these coverages because they've got some money to spend, and even if they match what the employer's given them, it's generating some nice premium, therefore with those level commissions, some nice income to you, the agent. This again is available to groups with 10 or more employees. Okay, let's take a look at the plans that are available through this program. And again, this is still part of the employer presentation. There are actually 4 group life benefits available that include a matching accidental death and dismemberment benefit. So the employer can choose as little as $10,000. They can buy 15, 25, or 50. The key point here is the employer must select one of these plan designs. And then as an option, they can choose to include what we'll call the old-fashioned dependent life, that it has a $5,000 spouse benefit and a $5,000 child benefit for children 6 months and older. So this is the benefit that, if it is offered, has to have 100% participation. Here's where this really gets creative. Voluntary life is actually probably the benefit that we hear from people the most about, and with this product, it's step rated. It offers a choice from $10,000 to $100,000 of voluntary term life. The rates are 5 years age banded. The employer decides whether to include accidental death or not to include accidental death. $100,000 benefit is guarantee issue if you enroll when you're initially eligible. So any employee can sign up for the $100,000 and there's no health statements. Spouse coverage is available up to 50% of the employee amount. The guarantee issue on the spouse is $25,000. So if an employee takes $100,000, the spouse can take $25,000 guarantee issue, or they can get up to $50,000 with evidence, health evidence on the amount over 25. And then finally, child or children can be covered for $2,500, $5,000, $7,500, or $10,000. And there is no participation requirement here. So that eliminates, this product normally requires the greater of 10 covered lives or 25% of the eligible group. So you can see by defining the contribution, the employer is guaranteed that someone or the folks that want it are going to be able to get their voluntary life, and they're not going to be held up by the folks in the outside locations who don't want to sign up. Second product available on a voluntary basis is short-term disability. We have 4 plan designs. The employer can choose which one to offer. Benefits begin on the 8th day for accident and sickness. There's a 13-week or a 26-week benefit duration. Or as an option, if you want to save some cost, employer can look at a 15-15 plan. Benefits begin on the 15th day for an accident or sickness condition, and again pay out 13 weeks or 26 weeks. Now with short-term disability, we do have two options for the employee. They can choose to do a flat $100 a week, or they can choose to do 60% of their salary up to $1,250 a week of benefit. This slide doesn't include, we recently increased this so that you can now do a flat 200, so that will be available shortly as well. So each employee can choose which plan design fits. They can either take the flat amount or they can take the percentage of earnings. It's a guarantee issue product. It does have a pre-existing conditions limitation of 12/12, meaning that 12 months prior to your effective date, if you've had treatment for a medical condition, that's considered pre-existing and will not be covered until you've been insured for 12 months.
And that includes maternity.
That includes maternity, so that's correct. And then here are the dental options. There are 4 plans to choose from. For groups of 10 to 19 lives, you can choose 1 dental plan. For groups 20 to 99, you can choose 2 plan designs. So as you can see, we've tried to create some attractive options here. We offer a $50 contract year deductible on option 1, and then a companion life standard plan is our $100 lifetime deductible, which is very popular with a lot of folks. And then finally, option 4 is also a $50 contract year. You can see with the contract year deductibles, we offer a family limit. However, on the $100 lifetime, there is no family limit. Each family member has to satisfy the deductible one time, and then they're good as long as they stay with companion life. That is a product we're pretty widely known for, and a lot of people like it. It does help us retain more groups on average than the traditional contract or calendar year deductible. But you can see each of the plans promote preventive by covering it at 100%. We're covering basic services, including endodontics and periodontics under plans 1 and 2 under basic. Option 3, we're moving it into major. Option 4, 80% as well. Dropping down to the major services line, you can see we're covering in major at 50%, so it's 180/50, pretty standard plan design. However, option 4 is really a basic preventive only. So you'll see in a few minutes how those rates are cheap, much cheaper, because obviously there's less coverage, but it does allow someone to add some dental coverage who may have spent the rest of their contribution on one of the other product lines. And then finally, each of the plans has either $1,000, $1,500, or a $500 annual maximum. And then you can offer orthodontia as an option. So we'll have rates with and without orthodontia for this product.
What about your network on that? Maybe you talk about it.
Okay.
Later.
Yeah. On Companion Life is a freedom of choice indemnity dental care, meaning that you can see any dentist you choose. We do pay claims at the 90th percentile of usual and customary, so we don't run into a lot of issues with overcharges. We do wrap our dental network around Dentamax, which is a national PPO network. So there are Dentamax dentists throughout the state of Iowa. They are primarily concentrated in the higher population centers like Des Moines, Cedar Rapids, Quad Cities, etc. But you do have access to a network. The network is expanding. Later this year, we'll have a lot more choices available, so we'll keep you posted on that. But right now, most people like us and embrace the fact that we're what I call a freedom of choice carrier, meaning that you pick your dentist and we pay your claim. Then finally, the last benefit available is vision. We're offering exam-only coverage, and then an exam and an eyewear option. We're part of the iMed network, so iMed is Target, JCPenney, Sears, LensCrafters, and then they also have private practitioners. So those are the main network facilities for vision care. Again, you can buy the low-cost exam-only option, which is another way to conserve some of that $25, or you can buy up to the exam and eyewear option. Okay. But what we would do next is take a look at the cost illustrations so that you can get some feel for what the rates look like for these products. We'll start with the group life. The primary determining factor for offering defined contribution is simply knowing the industry that you're quoting on. So what really makes this product easy is you don't have to submit a census. We price these products so that KHI can get the proposals out very quickly. All they need to know is the name of your group, where it's located, and the type of industry. Most groups, we can end up backing into a standard industrial code, SIC code. Sometimes it's a little more intuitive. So you can use websites, but eventually we'll figure out the right rates here. But as a general rule, you've got 3 rate tiers: preferred, which is at 21 cents per thousand, a standard tier, which is 25 cents per thousand, and a non-standard tier, which is 36 cents per thousand. These rates include AD&D. So doing some quick math here, as we looked at it earlier, the preferred tier rate of 21 cents with a $10,000 life benefit, that would be $2.10. So the employer can either pay for that premium and leave the full 25 defined contribution to their employees, or they can take it out of the 25, leaving the employees $22.90 left to spend. Okay?
And Jim, maybe give us a feel for the preferred, standard, and non-standard, how the classifications, the SIC codes, because I think we did a quote for one. It was a manufacturing facility, and I think they were standard tier, if I remember right, because I remember quoting $2.50 for $10,000 worth of life, and that employer was just going to buy that much for everybody.
Probably 85% of the groups will be preferred or standard. We have a small subset of Plan 3 rates, and most of those are going to be the more hazardous occupations, certain types of manufacturing or transportation. But for example, in the preferred tier, you've got business services, you've got communications, you've got school districts, you've got electronics and other electrical equipment, food products, grocery stores, repair services, veterinary services, wholesale trade, retail trade. As far as the standard tier, you're looking at car repair, agricultural services, courts and public safety, certain government legislative bodies, mineral products, petroleum products, personal services, social services, transportation equipment. So the ones that typically fall into Plan 3, we have to be careful for some of the, for example, trucking, long-haul trucking, and chemical manufacturers, police and fire. Those could be ones that we perhaps would have to get underwriting approval to quote. The nice thing about defined contribution is that some of these products are preferred in one area, non-standard in others, but yet some of the non-standards are preferred for other lines. So even if you couldn't do group life, there are some other products here that lend themselves very well, dental for one, that and vision for another, that are very easy to quote. They don't have really any industry restrictions other than dental offices for dentists. Okay, so here is a voluntary life product, and you can see that it's based on a preferred tier and a standard tier, and the products are priced on 5-year step bands. They're unisex rates, so male, female are the same. The AD&D is available at 3 cents per thousand. Again, that's the employer choice. So if the employer wants to offer AD&D, just add 3 cents, and our rate tables can be modified to reflect the AD&D purchase. If, but for example, for a preferred rate, it would make with AD&D 10 cents per thousand, and the life on the standard would be 12 cents per thousand. But looking at this, just to give you a rough idea, for $10,000 of voluntary life, for a 30-year-old, you know, you're looking at 80 cents a month. For a 60-year-old, you're looking at $12.20 per month. So it gives you some feel. But the nice thing is the rate tables are available, and the folks can just pick the level of benefits that they want to enroll in and whether to enroll. Voluntary short-term is costed at a rate per $10 of benefits. You know, the rates here again are based on industry eligibility. There are some industries that are not eligible for short-term disability. Again, they're mostly the hazardous ones like coal mining, ammunition manufacturers, detective guard and armor services. So there'll be a few that would not be eligible for STD, but they very easily could qualify for dental, vision, and life. So the important thing is to remember, all you need to do is be able to identify for KHI the industry that we're quoting on, and they'll get you the quote. The rates here per $10 of benefit, for example, if you pick the flat $100 at 57 cents per $10, that's $5.70 a month. Okay, and again, we'll have the tables and everything lined up to help you enroll the benefits and price this all out. Finally, here's a glance at the dental rates. Dental rates are available. Again, remember the 10 to 19 life group can pick one plan. The 20 and above can actually pick 2 plans. What we've done here is just select the dental rates for groups ranging from SIC range 0-100 to SIC 4999, and give you a snapshot look at those rates. They're all costed out: employee, employee plus spouse, employee plus children, and employee plus family. Again, there's no participation requirements here, so it's up to the employee where they spend their $25. Normally this product requires a minimum of 5 enrolled, a greater of 5 enrolled, or 20% of the eligible group. So again, you've got flexibility here. People can choose the benefits that they're looking for and decide whether to add additional contributions to purchase other lines. So we will have 3 rate tables for dental. There are some industries, as we talked about, that are preferred for life that are reflective of some industry codes adjustments for, in school districts is probably the best advantage or the best example of that. You know, each rate table will be tied to the type of industry, and we have discounted industries. We have the mid-level tier, which is from basically SIC code 5,000 to 6,000. Anything above 6,000, your law firms, your school districts, things like that, will tend to be industry loaded. They tend to use dental more statistically, and that's not just true for us, it's just true for for every dental carrier. But anyway, this is just one look at the rates. But once you've identified your prospect, Lynn and her team will be able to give you a proposal reflecting the appropriate rates. We also have some area rate adjustments for Iowa, as we do in every state. Certain groups in Des Moines will have a higher dental cost than groups in Fort Dodge, just because of the nature of the cost of dentistry. But again, that's pretty standard with everyone. Lastly, this little benefits calculator is just a way to kind of bring together how this concept really works for an employer. And you can see that this is kind of like a check register, but we're starting out where the employer has decided, I'm going to give all my employees $25 to spend. And the key is they have to spend it. So the typical employee would have the choice of voluntary life, vision, dental, and voluntary STD. I did not put the group life in this. This is just a table we can illustrate it a lot of different ways, but in this particular example, we had an employee decide to buy $8.50 worth of voluntary life. They decided to buy $25.68 worth of dental, and they decided to buy the flat $100 of voluntary STD. So adding up that total, there's $38.78 of benefits selected. Their employer has given them $25 to spend, so their amount out of pocket is now $13.78. So right out of the chute, we've got group life paid by the employer. We've got additional voluntary life selected by the employee. We've got dental selected by the employee. We've got voluntary STD selected by the employee. They chose not to enroll in vision because they already had that available, let's say, through a spouse. So you can see that this can move around and fit each employee's needs. So the nice thing about this approach is, the employer simply is figuring out how much they want to spend on benefits, and by defining their contribution, they're giving their employees choices that they normally don't get, plus they're eliminating the burden of having to hit participation guidelines on 3 or 4 different lines of benefit. So, we've got the capability of there are some paper enrollment capabilities. There's also some online enrollment capabilities that are being worked on, and as we go down the trail here, Lynn and I will be refining that, and KHI will have a variety of solutions for you on how to enroll these products. Okay, we'll have time for questions here in just a minute. I probably should have put this slide ahead of the questions, but we'll go back to the questions. But this is a real simple product. The employer is setting their contribution. It's real easy to set up. It does offer both an online and a paper enrollment, and it gives employees choices. It's available to all groups with 10 or more employees. There is no census required for groups from 10 to 99. All rates are going to be based on the type of industry. And then we'll do custom rates for larger groups. We want to make this available really to any size group. If you do have a larger prospect, we would simply ask that you give us a census, and that way we can price the dental and the group life and try to be as competitive as possible, recognizing that those two benefits, because they're often rate sales, especially when they're paid for by the employer, we will try to refine your large groups to fit as closely as possible. So this is very easy to quote. We've empowered Lynn and her team with the documents to, Nakia is in charge of quoting, and we're going to empower them with the proposal page pages so that when you identify your prospect, you can simply pull the appropriate life and dental pages and voluntary life pages, depending on the coverages you want to quote, and we'll get the quote out to you right away. One other thing I wanted to point out is there are more and more health insurance plans that are going towards defined contribution. Defined contribution isn't new as much as it is new to ancillary products. The 401k retirement plan is the ultimate defined contribution, and it's now gravitated to medical. For a long time, employers always determined a percentage of the premium that they were going to pay towards their health insurance. Well, as time went by, the percentage stayed the same, but the premiums always went up. So each year the employer was either having to absorb that cost or reduce benefits. Either way, it was a burden. Well, by defining contribution, the employer's more in control with the health plan, but he's also now empowered with the ancillary products. And I know that Blue Cross plans in various states that I market are doing defined contribution, and that it is available from Wellmark for your small groups from 1 to 50. Although for ancillary I'd have to have at least 10, but this product really would lend itself well. If you're out there quoting defined contribution from Wellmark, you definitely want to ask Nakia for a quote on the ancillary, because it just piggybacks on that concept. It allows the employer to define how much they want to spend, and it gives the employees some choices. Okay, so that pretty much wraps up the formal program here. I do want to thank you, but we also wanted to take time for some questions today, if you have any.
Thank you, Jim. Say one comment too, because we've been through this process with another agent, and when you work with an employer, they're going to look to you, the agent, to help them decide which options they want to offer in many of those product families. So especially, I'll use dental as an example. Of those 4 options, then you can maybe offer 2 and so what, depending on the group size. But sometimes you need help trying to determine. The short-term disability is another good example. Which offering am I going to give to my employees? So we talk about employee choice, but make sure you know that the employer selects certain plans to offer, and then the employee, of course, gets to decide which of all those plans they do want to enroll in once the employer has made those choices. So you're going to be instrumental in helping them decide which ones they should offer to their people that would be of most benefit. Again, whether that would be a flat dollar amount, for example, on an STD, or a percentage or whatever. So. All right, well, why don't you guys know the routine. If you have any questions, go ahead and raise your hand. And we've got our first question here from Paul. Do you have to have a major med plan in place to use this product?
Actually, no. It's designed to stand alone, and by discussing the concept as an ancillary offering, it definitely opens the door to having the discussion about the health insurance. So, but this is designed to stand alone without the health insurance, but hopefully open the door for you to get a chance to quote the health insurance on the same basis.
And maybe I could tag on to that as well. They might already have, for example, a dental plan in place, but that's okay. You just wouldn't show that one then in terms of an option, so then it just narrows down the options that they have to pick from in terms of spending their $25.
Yeah, that's correct, Lynn. I mean, the nice thing, a few weeks ago I was in a meeting with an agent who had a companion life renewal, and they had been with us for a number of years and offered employer-paid life, STD, and dental. They had always wanted voluntary life, but they could never hit the minimum participation. The nice thing by using defined contribution, which we're going to show them next year at renewal, we'll finally be able to get that group some voluntary life. They've never been able to get more than 5 people to sign up, so they each year keep missing their target. But even though they didn't go defined contribution this year, they did add vision. So just bringing up the discussion, even if an employer doesn't want to do defined contribution, you know, it does reopen that door to talk about voluntary products, which everybody's talking about, and everybody needs to be talking about to you know, to protect your relationships.
So maybe another comment / question. You may have someone that the defined contribution, as Jim said, got you in the door in a conversation with that employer, and ultimately we find out that, well, we really only want a certain product, and it really doesn't need to be defined contribution. So then it's just rating it differently then. So it's rated one way when you use the defined contribution, but then maybe if we end up going without a defined contribution, it would just be like generating a quote for that case.
Yeah, that's correct, Lynn. All of our products will be available for KHI to quote, so Nakia will have access to be able to do you know, the standalone life. If you only get a chance to quote standalone coverages because you've opened this door, we're really looking for this product to do two things. First, of course, we want to sell some products, but the only way we're going to do that is you know, to open some doors, and you know, we're hoping by bringing this product line, this approach to the ancillary marketplace, we can generate some activity for you, you know, and for the folks at KHI to kind of stir the markets up a little bit and bring something different to the table. That was Lynn's challenge to me. Bring me something different. So that's what we've tried to do here.
So another question that Paul asked is there a quote sheet for us to use?
There's a standardized proposal format, and it really only varies by industry. So there's really two steps in it. You have to personalize the cover. It's a Word document. You have to personalize the cover to the name of the group, and then you simply have to select the appropriate group life page and the appropriate dental page and the appropriate voluntary life page. So over time, it's a pretty simple, straightforward proposal. It only will have about 10 or 11 pages in it, but having said that, we're in the process of automating the proposal format, and you'll see some different versions of it. But this is set up so that we could, if you're interested in marking it more proactively, we'll work with Lynn and Nakia to design some tools that will allow you to pull some things out of your briefcase that you can model this to a prospective employer. But it's really no harder than making a phone call or shooting an email over to KHI, and they'll be able to crank these out very quickly because there is no census requirement.
What I might invite you all to do, you folks that are on the call today, is just send an email to Nakia specifying the name of the case, their address, and their SIC code. If you have trouble finding their standard industry classification code, just let us know what type of business it is, and let us generate a quote for you. I think that's probably the best way to do it, and then just review it with Nakia, and if we need any help, we can certainly get Jim engaged. Jim's on the road a lot. Your headquarters out of Kansas City,
yes,
correct?
Kansas City. Mm-hmm.
Yep, so he's not far away from us, and he's certainly available and willing to come help us if we've got a case that would warrant that. But Nakia has familiarized herself with this enough to know how to kind of walk you through it. So yeah, I would invite you to do that so you can take a look at the rating and yeah, maybe open a door for you.
You know, that's what really is appealing about this product as we've talked to folks, is they realize it is something different, and I think you've got a nice advantage here in Iowa with Wellmark already embracing this and offering it from a medical standpoint. It ties in very nicely to what they're doing. So if you're quoting that approach on medical, or even if you're not, maybe it's a good time to be looking at it. And because now you've got an ancillary package that will tag along perfectly with it.
Jim, do you find that there's any better reception to this for somebody that is brand new at offering benefits, or they've already offered them and now they're trying to embrace this concept?
You know, I think it plays really everywhere. I mean, one of the ways that this appeals to folks is, you know, most groups have a medical plan, and they probably have a group life. But if you think about it, the typical employer, look at your client groups, you know, there's a medical carrier, there's a different life carrier, there's a dental carrier, and maybe they wish they had vision and voluntary life. Well, each carrier has their own billing statement, and one of the ways we've approached, I've seen people approach here, is that this takes negotiating rates off the table, and it takes having to handle multiple billing statements every month off the table. So it can greatly reduce the amount of work. And, you know, without being cavalier, you know, sometimes just throwing out there, well, if I had a product that you didn't have to negotiate rates on, and I could give you multiple lines of coverage with no participation requirements and put it all on one billing statement, would you be interested? And stuff, because again, this is really, these coverages aren't unique, but the way they're being packaged and the way they're being promoted is what's unique, and it's something that maybe everybody already has, and if you're looking to just quote the group life that they already have, you've got to beat the rate. Well, here you can have that conversation, but you're talking about managing and defining costs and eliminating the big bugaboo of participation, plus you're putting it on one billing statement. So.
Okay. Well, it doesn't look like we have any other questions today, and unless there's anything else, Jim, that you want to share?
I just want to say thank you for joining the presentation this morning, and feel free to send your prospects and questions through to Lynn, and we'll work together to get this quoted.
Okay, great. Well, thank you everyone for joining us. Have a wonderful week. We'll talk to you all soon. Take care. Bye-bye.